Thank you, Douglas. And we'll be getting into our presentation on Asian neobanks. I'm Andrew Haslip, Head of Content for Asia Pacific from Global Data. And I'm just going to run through a few of the latest trends and whatnot that we're seeing in the Asia Pacific region for neobanks. The agenda for this presentation is we'll just go through some of the current state of play in terms of neobanks around the region. A brief look at the regulatory kind of scene and some of the things that are still in train for 2020. Then go over some of the consumer appetite for digital-only banking, and finally some interesting lessons that I think are relevant for the neobank scene in Asia Pacific specifically. So first off, kind of look at those competitive dynamics, where we are in terms of the neobanking scene. So obviously neobanks which is what our company kind of refers to the digital-only banking service providers out there all across the world. It's really the culmination of a long-term trend of digitization in consumer banking, and I guess it's a logical conclusion that all the decisioning and such behind the bank would actually be made entirely through software. So that's really something that started to get underway in the region in 1997, and it's gone through various iterations from just purely contactless payments up to mobile payments and such, starting in online banking and moving all the way to fully mobile banking. And along the way, obviously, we've seen a number of players come into the system, with the Hong Kong banks being, I guess, the latest wave to join the ranks. When we're looking around the region, though, it's not just confined to developed markets. If you're looking at Asia Pacific, there's quite a few neobanks that we track. Obviously, there's some in the mainland China as well, but I'm just kind of giving a flavor of neobanks from around the region. So we have a lot of developing neobanks, developing market neobanks, often the subsidiary brands of established banks around the region. So it's something that we see quite a bit in Asia Pacific, and not as much in other markets, although there's a few in Europe that have done something similar. But you've got Tomorrow, which is UOB, and that's their entry into Thailand and Indonesia, where they already had a banking presence there, but it's really a way for them to get some additional penetration and reach when their branch networks were really quite lacking. And that's the same sort of thing that you're seeing from the Malaysian banks going into other markets as well. And I guess one of the outliers here is probably Cao Bank, which is purely a kind of a homegrown, domestic-focused player. Arguably one of the most successful neobanks in Asia Pacific as well. Significant profits, significant consumer base, 10 million plus, not too bad in terms of the Korean market when you look at just the banking market size. And then there's also, I wanted to add one of the I guess the different types of banks, because most of these are either consortiums or subsidiaries of big banks. But then there's also Timo in Vietnam, which is I think a good example of an overlay bank, which is a bit of a different one, and I'll get into a little bit why we categorize them differently from these other ones later on. Of course, 2020, you can't talk about neobanks in Asia Pacific without looking at Hong Kong, and looking at Hong Kong in some depth. So obviously there's been a big push this year and late last year with our first first neobank to be launched in Hong Kong, the ZA Bank. I guess some of of course, they've been launching throughout the year, and to greater or lesser fanfare, depending on when the actual COVID market disruption happened. But some of the things I just wanted to draw out around what we're seeing in terms of the Hong Kong launches that are slightly different from what we saw elsewhere, is first of all, that I guess faster payments, the real-time retail payments, really does feature quite strongly in a lot of the push and the draw that these neobanks have. And in terms of the market, there's a real big push on that. Whereas in other markets, we definitely have seen them prioritizing the debit card a lot more. There's a few players, obviously, in the Hong Kong market, which have given rewards and cashback, for instance. So WeLab being particularly, and Ping An's bank there as well, also giving quite a bit of attention to the debit card and current account. But generally speaking, there's been a lot of focus on faster payments rather than the card use as much, and that's certainly been something as well that goes into even the credit area as well. Yeah, there's been consumer credit provided and all that, but a real lacking in terms of credit card provision, which is a bit of an own goal on that one as well. Some of the other interesting aspects that we're seeing in the market, obviously, is that the consortium model dominates, and that's something that we definitely haven't seen in other markets. Very much an Asian trend and reflective of what the the regulator wanted. And also that there's been, I guess, a big push in terms of the SME, so providing SME accounts and lending, as well as multi-currency aspect that other neobanks around the world only got to over a number of years after launch, where that was something that ZA Bank was promoting right away. Their multi-currency term deposits and ability to shift funds through their system in different currencies. That's definitely something that has been later, and I guess it really reflects a bit of the international Hong Kong market, really, that being much more important to the local players than it would be, for instance, in Australia or even in Europe itself. So. Here, just looking at the final couple of brands to come into the market, are well still to enter in terms of Fusion Bank, still in the pilot stage there. I guess I also wanted to highlight a little bit of these last two as well, being a play by the incumbents, to tap into the neobank kind of experience when it comes down to it. So with Mox and Levy there, some notable trends I just wanted to highlight in terms of the neobanks as well. When you're looking at what the promotional rates are, in terms of the consumer credit on offer, as well as the savings accounts, TDs, and all that are on offer. Really, there's negative NIM. Obviously, that's on the promotional rates, and that's not offered to everyone, and it's limited and capped and all these kind of things. But if you take out the headline rates, right, there is a negative NIM there. That is something that we see in other markets as well. Neobanks around the world have struggled mightily to generate significant amounts of NIM. Really, their focus and their main line of business has been on the fee side, and that's in particular on the payment side. So looking at interchange, which is quite a small percentage in most markets, really. The multi-currency aspect, obviously very, very important. The real-time account opening, also been a huge feature of the market, and very important for the marketing of these neobanks, as well as real-time loan decisioning effectively, or near real-time loan decisioning. And finally, obviously the SME side of things being pretty important as well. And we look at what the local banks have done to counter this kind of trend. Obviously, there has been a few, like Standard Chartered and Bank of China there, that have got into the neobank, are competing with the neobanks of their own. So that's something that wasn't as prevalent in other markets, and I think it's kind of reflective of a bit of a more of a go-to attitude in the Hong Kong market, and as well something that we see in other Asian markets as well. Um, a little bit longer term is obviously been a focus on wealth management, and it's hard to split this from, I guess, a wider focus on wealth management that we've seen in Asian banks. But there has certainly been statements by a number of banks in Hong Kong that they're looking to pursue that wealth opportunity and use it as a bit of a shield to prevent their clients from wandering away to the neobanks. That's I think a little bit problematic in terms of that. I think there's obviously, it's always good to provide more services to your clients and better services and all that, but whether investments in wealth management itself actually is a really great shield is not entirely established, and I think we have some consumer data that kind of argues against that. And I guess finally, there's just been cuts to fees and in product costs and all that. So particularly important in Hong Kong, as 12% of Hong Kong consumers actually do pay a monthly fee for their banking services. So that's obviously something that there's an ability for them to compete on. So that's and pretty important. Though a lot of those fee waivers, I got to just say, were on first secondary features and not everyday banking, let's say, and not for necessarily for the main account. So that's an issue. And finally, I guess there's been investing in partnering with fintechs to improve their own digital capabilities so that they're not quite as far behind in terms of digital decisioning and that sort of thing. One area we haven't really seen much action is on the rates, particularly on the savings rates. A lot of the neobanks led into the market with very eye-catching APRs. And that's not really something that the big established banks have engaged on in any way. They're really, I guess, content to let them, run through their promotional budgets and marketing budgets and wait it out, essentially, not willing to compromise their own NIM when it comes to at least the savings side of things. And that's probably a legitimate kind of strategy. There's no real benefit for cutting out that kind of money. The other side of things that I just wanted to highlight, of course, in terms of the competition that the traditional banks face from digital banks, is if you break the market up in terms of kind of broad categories of bank activity. So the top one being the very, very classic, mortgages, and that's really, you can see. Traditional banks still have a big hold on the consumer psyche across Asia Pacific, with 55% saying that if they had to get a new mortgage out right now, who they would like to use, traditional banks and mutuals and such come up quite strongly. Neobanks and digital-only banks and pure digital lenders, for instance, still come second, which is pretty impressive. But there's a big step down you can see there, and that's really, I guess, an area where there hasn't been a lot of movement. And incidentally, there's not a lot of mortgage offerings for the new banks and in Hong Kong, for instance. There's only been a wading into SME and consumer credit, not these big ticket items like mortgage. So I guess that's kind of reflecting that a bit as well. On the basic kind of accounts, savings, TDs, your everyday account, that kind of thing. That moat begins to look a little bit weaker. There's a lot more consideration for other players there. So digital banks get a big increase in terms of demand, but also crucially, and this is probably very much an Asia Pacific trend really, digital and mobile platforms and wallets get a big increase as well, and that's I think something that we need to consider when we're looking at the neobanking scene. Is obviously some neobanks are actually backed by digital wallets themselves. I mean, Tencent's in there, Alipay and Alibaba, backing players in the Hong Kong market itself, and we have to look at the synergies between those, the network that Alipay has, for instance, or Tencent has, and how that's going to be supporting their play into into the banking market more broadly. Whereas it wouldn't necessarily be the case for a bank outside of the region. Consumer credit, once again, the lead goes down. Currency exchange, and so this is quite interesting given the Hong Kong experience, quite a big step up. So now a majority of consumers would choose a non-bank, essentially, or anything other than a traditional bank. And a lot more of that opportunity is going to the neobanks themselves. Investments is a bit more of a miss. This is why I question whether the focus on wealth management really is that shield that so many banks expect and hope for a neobank. It seems like you're just bringing yourself directly into competition with them, which is fine because you need to be in competition. But just as a caveat. And finally, I think right at the bottom is a very interesting one that we'll come to a little bit later on, and that's around budgeting tools and the software to analyze your finances. There's a big expectation that one is not going to a traditional bank for that kind of insight and help budgeting essentially, and that's one of the areas where neobanks are the strongest is in that area. So pretty interesting itself. Looking at the regulatory scene, there's a lot of regulators in play across the region, and it really does shape what we see in terms of the neobanks that result. So a lot of what we see, particularly in Hong Kong and Singapore, is the consortium side of things. So joint ventures between major banks or insurers and such, and non-financial companies. It's coming together to create a neobank brand. So that's the consortiums kind of side of thing. That's really what we're seeing dominating in terms of Asia Pacific, not just in Hong Kong and Singapore, but in a variety of markets. You look at the mainland, China. You look at anywhere across the region, really, and that's what's coming out. Really because the regulators, their priority on stability and kind of the integrity of the financial system, that's why you get that kind of need to partner essentially, and not just launch a new bank. And of course also the other big kind of player realm is in the digital bank subsidiaries, which is prevalent across the world, but you see a large amount in Asia Pacific itself. We don't see as much is, of course, those overlay startups and pure play kind of startups. There's not as many of that in the region. And one of the reasons why is just because that is more difficult to do, I think, across borders. So it's all very well and easy for someone to just partner with a bank in the U.S., but if that bank doesn't have and be able to reach the entire U.S. market, but if you're just partnering with, let's say, a Vietnamese bank, that doesn't necessarily give you any reach around the region, and so that kind of lowers the utility of that kind of overlay aspect, and that's one of the reasons we don't see that happening as much in our region. And we really don't think it's going to happen until there's a lot more integration than what there is currently. One of the other kind of regulatory side of things we wanted to get into very, very briefly is just look at where we are in terms of the new explosion. Obviously, Singapore is ready to explode in terms of the neobank scene. It's fairly progressed, and obviously we're going to see some licenses grant. Well, not obviously. We expect to see some licenses granted this year before the end of the year. Malaysia maybe being a bit of a laggard in that one. The COVID kind of derailed their plans a little bit more, but we do expect to see quite a bit of activity going into 2021 as well. But really, both of them are kind of prioritizing that local control and stability of the banking system, in addition to that additional competition. Competition, but not in red in tooth and claw, as it were. Now, one of the aspects of why the regulators would be so cautious is when you look at the consumer appetite for neobanks and just anyone else, actually. So you do see quite a bit of engagement with the idea of using a different bank, or using a different so not I should say a different bank, a different player other than a banking player in quite a few markets across the region. It varies considerably. So you got your kind of Anglo markets, Australia, New Zealand, there being quite a bit more skeptical when it comes right down to it. But then there's some big beasts in the markets, so the mainland China, India, Indonesia, being very open to non-banks, essentially. But even Thailand, where there's a bit more development in terms of the banking scene and consolidation, still quite a big openness to the new players. So that's great if you're a neobank. Obviously, if you're a regulator, you might be a little concerned and want to put some brakes on things. And so that's really what we've seen coming into it. So, but across the region, essentially 1/5 of the market in play for neobanks as being the preferred user for current and savings accounts, which is really what is the initial product suites that you have to lead with. We haven't seen anyone be successful without going on that first, and it's really when you can start earning any type of NIM and such. So there's only really one other market where there's a big kind of surge away from neobanks, and looking at other potential providers, and that's India, where there's a great willingness to consider big tech companies, so like your Google and your Apples and all that, as a banking partner for these basic services. Most other ones do focus on at least some sort of financial services focus, so that's a bit more constructive. In terms of the digital banking scene overall,